All right, guys, this strategy is ridiculous. This low float gapper strategy, uh, it's unbelievable. If I had seen this years ago, I would have started trading this years ago. Uh, we are at $12,800 profit on a $10,000 account in just over 6 weeks. That is unbelievable. Do I expect it to continue this way? For the most part, but you know, with the caveat that there definitely will be some hiccups along the way. And I want to keep showing you how we trade this so that you can see exactly how we deal with those hiccups. Now, the only mistake that I think I probably made was in being just a little too overly cautious, right? Because we were looking at the major indexes. They started pulling back here a bit. So I was being really, really cautious with that because I didn't expect the strategy to perform very well under those conditions. Well, let's see what happened here this week. We got a massive winner. This could happen. This is another reason why I like this strategy because I knew that this could happen. Cast executed an entry, and that's actually low. This is just if we just had a minimum risk, but I never really dial it into like exact number of shares, so it's a $500 risk. So I had a few more shares, and we actually ended up doing better on that trade than we thought. Um, it was a $5,173 dollar win. And how did we do that? Because we've set up a 2-to-1 risk to reward. Here's how we did that. Because I set up my orders to execute during regular trading hours because I don't want a stop entry order. If the price spikes up, I don't want the stop entry order to get me into the trade and then the trade gets crushed at the open because that does seem to happen quite a bit. I want my stop entry order to execute when the market's actually open. I want it to execute on volume. So that's what we did. However, because it doesn't execute during pre-market or after hours, we got this big gap up, and I just happened to wake up here in the morning and see it here, and I closed it out. I closed the trade out manually for this big win of $5,000. When you think of it in terms of risk to reward, that's a 1 to 10, or I guess a 10 to 1, however you want to say it, risk to reward. We got 10x the amount that we risked. And I knew that that could happen. Here's a lesson. Everybody's worried about gap down. Everybody's worried about me, uh, this strategy, getting us in here, and then we get this big gap down that goes way below our stop, and we lose way more money than we expected to, right? Well, I'm only getting in with a few $1,000s here, first of all. So even if it went to zero, I could only lose a few $1,000s, and that's not good. But what my point is, you guys are unduly worried about this because it doesn't happen very often. And I'm not actually in the trade with that much. I'm not risking that much. So let's say I went into this trade with about $2,000. You could probably do the math on it. We took 350 shares. We took 350 shares at $7.70. So we were in with 2,700 bucks, right? We literally pretty much doubled our money. Maybe not quite, but for all intents and purposes, we were very close to doubling our entire money on this trade. So think about that in terms of catastrophic loss risk to reward. So if it had gapped down, I could have lost a maximum of $2,600, but it gapped up massively and I made an additional $5,000. Even when you view it from like a tail risk type thing, like what is the extreme worst thing that can happen versus what is the extreme best thing that happened? It's still a 2-to-1 risk to reward, We're still winning on this. So everybody gets super duper worried about gap downs and stuff. You know what, guys? If you're picking a momentum stock that's in an uptrend, it's way, way, way more likely to gap up than it is to gap down. And then if it gaps down, crap happens, but you're going to find that you probably don't end up as losing as much as you think that you would. It sucks, but if you know your risk to reward, if you know your win rate typically, and you know your expected outcome from that, then you can have confidence that it's not going to do that all the time. The majority of time, you're just going to take a nice winner. So, uh, the mistake that I made, I mentioned before, was that I was overly conservative in not moving to a real money account. I did set up the real money account. It's good to go. Again, I'm inviting you guys to let me know what your favorite software is for validating that strategy because I will use it on that live account. But yeah, as it turned out, I was being overly conservative. Like if things hadn't worked out, would I be saying this is a mistake? Well, no, I would have been saying, oh, I did the right thing, right? But whatever. The reality is, we learned something. We learned that I actually was being overly conservative. So, the trades that I set up on Thursday when I did my scan, I did set up in the live money account, and we're going to start trading that. Now, also, for those of you who are paying attention, you would have noticed that I was taking a 5% risk on this paper trading account. And we do things like that with paper trading, right? Whatever. I grew the account fast on a 5% risk, but when I switch to a live account, I'm moving down to a 2% risk, which, some of you might say, well, that's still on the extreme high end of the amount of risk that you should take per trade. Maybe, but I've done some validating here, and I trust this strategy enough to take that 2% risk. So I'm okay with that. So, rocket of a strategy. This is going wildly well. It wasn't our only winner of the week. We did have one other winner where QH, and we just got our regular 2-to-1 risk to reward. Looks like it took about 4 days to play out here. And that's okay. Totally fine. That's why I stick with this. Um, here's an example of a gap down that we were just talking about that folks are overly concerned about, right? So we did end up stopping out. For some reason, it stopped out for, more of a loss than we expected. We had this move down and, we got slippage. Guys, it was 150 bucks of slippage, right? Versus, the slippage on the upside, if you want to call it that, on this other trade where I made $5,000, right? Made $4,000 more than I was, initially expecting to make. That's why we love momentum because, everything's weighted in your favor with momentum. There's a few things you got to know, a few skills you got to develop, learning to read the broader market. But overall, the risk to reward is weighted heavily in your favor when you can identify momentum. All right, let's move to the small and mid cap strategy. So you can see here our win rate came up slightly from 15% to say, but it doesn't make we still have a very small data set here. That's okay. Tracking everything that comes up on my scanner every day is getting to be a bit more of a quality data set. Starting to get into like the 75 occurrences tracked. Let me show you what's going on here. Some of you may be wondering, well, why haven't I gone back and done an analysis? Why haven't I spent more time with this? Am I just focusing on the other strategy because it's performing so well and I want to show you how good I am at trading? It's like, no, that's not why. See, this next part is the meat, something that you can take home, something that you can use, something you can learn from. A big problem that traders run into is they don't know where to take profits. And this reason is exactly why I haven't gone back and done a review yet because we do have a fair amount of trades. Okay, so let's take a look at AMBQ. AMBQ is the very first name that we tracked. And when it came up on the scanner, now granted, this was the literally the first thing I ever scanned for, right? It was the very first name that came up on this scanner. But I tracked it as an entry signal of 3770. So 3770 was over here, which of course makes sense. I was looking for it to break out above here somewhere. And it did. Chopped around and then gapped higher, and we're at 90 some bucks. So many of you will have drilled into you that you should have taken profits. Many of you will think if this gaps down now and I get stopped out for break even or lose half my profits, I deserve that because I should have taken profits. Right now, we're still in data gathering mode. I don't care if it gaps down. I really don't care. I'm not actually even in this with a paper trade. The information that I want to get off this trade is where do I stop out? Am I using, I believe this is the 9 SMA. The 9 SMA is not working great. There is still more upside. Of course, the 50 SMA here is not great because I'd be losing so much, right? Am I looking for a shift in the underlying catalyst? This is, I believe, a semiconductor stock. Let's just check the spreadsheet. Yeah, it's a semiconductor stock. So where do I take profits? I need to look at a bunch of these big winners and find out where is the best place to take profits. Or is it, like I said, a catalyst shift? Is it a shift in the broader market? What is the reason to take a profit here? Because this trade is not a trade where I'm going for like a 1 to 2 risk to reward. This theme-based sector rotation momentum trade, I'm going for like 5x and 10x winners. And I'm not talking about on my risk. I'm talking about the money that I put into that trade. I am going for massive winners. So right now, we had about a 17% win rate. That's still a bit low. I'd like to double that. I'd like to get maybe into, the high 20%, maybe even low 30%, but I'm not looking for a lot of them to work. The ones that do work, though, I want them to be massive winners. Is it going to work out that way? I don't know, but those are goals. That's what we're looking for. So I'm going to go back and I'm going to study the charts on these massive winners, and I'm going to track where do we take profits. Let's look at a few more. Let's look at Atom. Where are we on Atom? Okay, so I have to ask, is this a trade that I might have thought didn't work? We got in to our entry signal was at 760 on Atom, and we're at 9 bucks. I mean, we got all the way to 12. That's not even doubling the price. So I'm serious, guys. These things can go. So here's another example. VSH. This is one that comes up all the time when I'm scanning. VSH is at $64 and our entry signal was way down here somewhere at 30, probably right in here somewhere when it pulled back, and I would have set a stop entry somewhere in here for it to break out again. These things can run. Do I want to at least double my money? Yeah, I want to at least double my money. That's why I'm doing this strategy. So So, like I said, the big question is where do I take profits? I need to see enough of these runners go through a cycle where they rotate and they drop off, and maybe money rotates into a different theme or sector. Maybe nuclear energy comes back or something like that, right? And then semiconductors just take a break. So once semiconductors take a break and they pull back, now I want to go back and just make notes. Where was the best place to take profits? What indicators might have told me? So that's what I'm waiting on there, and that is what you can take home because everybody asks, doesn't matter what strategy it is, opening range break, whatever it is, people ask where to take profits and they get very upset because sometimes they think they've left a bunch of money on the table. So the next time they let They let it run for longer and they get stopped out. And now they're just like emotionally that whipsaws you all over the place. You don't know what to do. So what you need to do is track a whole bunch of charts, look at it, look at some confluences, some different criteria, and decide where the best place is based on what you've tracked to take profits. So I've never shared this before. I have a very big goal for this project. Right now, about 97% of retail traders fail long term over a 5 year period. Of that 2.7-ish percent, I think it was, that don't fail, a further 2%, most of those don't make money. They simply break even. So you're left with actually a fraction of 1% of retail traders that actually make money long term. I want to reduce that number. I want to get it down to like 70% or 50%. I want more than half of the retail traders that decide and truly decide that they want to put in the effort to become successful at trading. I want them to have the ability to do that. So that's why I'm sharing the process, right? The process to learn how to trade, to start with an idea, to start with the basics of trend following. Start out by learning some of the major indexes, seeing how support and resistance and trend lines hold up. Get used to that. Get used to learning how to back test and forward test and review and how to hold yourself accountable in a way that doesn't damage you emotionally, in a way that is actually the scientific method. It's data. It's just we're going to track this, we're going to figure out what works, and then we're going to do that. And that has the added benefit of providing longevity. Because if your strategy ever breaks or stops working for some reason, you can go back to the spreadsheets, you can go back to this method, and you can keep trading it. So please share this content. I want to get it out there. There's a lot of retail traders trying to learn that are really upset that there's no good content out, right? Nobody's showing how to actually trade. Well, I'm showing you. This is how you actually trade. Focus on the data. We will get to trading psychology stuff as it comes up because it's very important. And I also can help you a lot with trading psychology. It's a fairly broad subject, and I would like to get some videos out there about exactly what that looks like. But the place to start is to learn how to trend follow and learn how to track data. That's the place to start. Then we'll get to trading psychology. So as I mentioned, please share this content. I want to get it out there. Give me a like, subscribe, and I'll see you on the next video.